Let's get the analysis started. So, last week I mentioned, was it last? Yeah, it was last week, wasn't 2 weeks ago. I mentioned I was going to be taking a trade on US 30, a short. That is, I was selling US 30, and at the same time, I was selling US 500. And thank God that so far it's going well. So, today is just gonna be a mix of weekly outlook. Then for you that asked how I make my analysis on US 30, S&P 500 and Nasdaq, and then those of you that also asked about top down analysis, stick around, familiar with. So top down analysis, right? I'm going to be showing you how I actually do that. First, that is going to be the first thing I'll cover. And top down analysis, for me, I always start from the monthly time frame when it's necessary to do so. And it's why? Because that is the highest I can actually go. Some people can go 3 months. So I don't really do top down analysis except for the facts where I know, okay, I've gotten a daily level or I can't find my daily level. So I just need to go higher time frame or go lower time frame to find a textbook supply or demand level. That is the only time you would find me doing top down analysis. But just like the mainstream education on trading, how we know about it is start from monthly, go to weekly, and the rest. But me, when I eventually, because first of all, what I first of all find is my fundamental analysis. And while I've gotten my fundamental analysis set, I would now look to the daily time frame or weekly time frame to see if there's any level I can refine. I don't usually just start from monthly and go top down because it might confuse you, especially when you don't have context on fundamental analysis. You get, so that is it for top down analysis. I don't know if it makes sense. If it doesn't make sense, still specify more questions so that I would know exactly what you need. But then let's get into it. This new week, I would still review US 30 and the rest, but first of all, starting with the new week and what my plan is for this new week. Because if we check the recent COT reports, we can see that the institutions are they have extended their orders into where in our index would consider them bullish. So right now, you can see that institutions have become bullish, contrary to present price action. That is for the British pound, and I feel awful. I feel awful for not taking this trade on British pound, but then I don't want to move. I don't want to be crying over it because then remember, if you have been following this channel, you know when I start talking about shorting British pound from way up here. From here, I was thinking of shorting British pound, but where I became hesitant was because I was waiting for this level below, which is this rally based drop level here. But the market never ever got to that place, and we saw the market just melt down completely, especially with this whole Iran war with the US and Israel that escalated things. So that was a missed trade for this year, but I'm not going to I don't want to dwell on it too much. So now I'm seeing that on COT the institutions are looking bullish, right? And the retailers not yet bearish yet, but still I'm seeing the institutions looking bullish. On that was British pound. On euro, the institutions are not yet in that place where I would consider them bullish yet. They are just few orders away from becoming bullish. Then Australian dollar, the institutions are still in that bearish zone. And Australian dollar that I called last week actually went well, but I just took it on the instant funding account. I didn't take it on my main account. But then I don't want to still dwell on it also because seasonality for Australian dollar will not be looking good in coming weeks. So that's why I'm staying away from it. But then the sell side actually played out properly. Canadian dollar on the other hand, the institutions are still looking bearish, retailers are looking bullish. Canadian dollar has just been painful because it came, stopped me out break even and started turning to my direction, which I don't like dealing with because it's very stressful, but that's it. Then New Zealand dollar, what are the institutions doing and what the retailers doing? Institutions looking slightly bullish, but not extremely bullish compared to previous behavior. So I'm staying away from that. I like seeing clear behaviors from institutions and from the retailers. Then on Swiss franc, I see that institutions are looking bullish, retailers are looking almost at that bearish level, just about 9% from where we would consider the index bearish for the retailers. And then we are coming close to a weekly demand level. So I might be paying attention to this in the coming weeks. Mexican pesos is not something I'll be looking at anymore. Japanese yen institutions are looking bullish, but right now I'm staying away from it. Now to get to the index, because we'll get back right now. We know the British pound institutions are bullish, the euro institutions are bullish, Canadian dollar institutions are bearish, the Australian dollar institutions are bearish, and Swiss franc institutions are bullish. So those are the ones I'll be sticking with. But then to come back and observe this Dow Jones, because someone was asking how I come up with my trade ideas on the indices, and I just want to say I don't always make use of COT, because if you pay attention to that trade I took last week, you will notice that I didn't really pay attention to COT like that. But it doesn't mean it's not necessary. It's very, very necessary. But what I do is usually me looking at seasonality, seasonal tendencies. And one thing I would want to say is this market is just about your time in the market, because the longer you've been in the market, the more you see things that become second nature to you, and you would know, okay, I've observed this thing before last year and I didn't capitalize on it last year. This year should be different. I would capitalize and see my results from it. So last year I knew that February, March, and then April first week was when the market bottomed. And with the whole thing happening with US, I checked seasonality and I still noticed that seasonality is still moving to the downside. And then technically, we are seeing that we are failing to top the market. Last time the all-time high was in February, and we've failed to hold that level. And when I noticed that a structure was broken with this particular supply level here, you can notice from here, if you're using a normal textbook type of trading strategy, you would notice that this was the supply level that broke through this recent structure. So it was just a no-brainer for me personally to just take this supply level short from here, and it worked out for me. And this is so far like one of the cleanest, this is not one of this is the cleanest trade of my career. Doesn't mean so far this is the cleanest trade of my career, and it doesn't mean that it works out like this every single time, but then this was just very, very clean on my side, and I'm still holding it even though I've trailed my stop loss on the trade. But then I'm holding it to likely this level below this, not necessarily this one, but this level below. And if it's getting there, then I know that I've already passed my prop firm challenge with this particular trade. And speaking of the prop firm challenge, it's still ongoing. These trades are still active, and I just want to see how it goes this new week. Then for the second, which was S&P 500, it was basically the same concept, knowing what seasonality usually does, observing last year, observing 2 years from now, observing a particular period, and knowing that okay, this particular point is usually bullish or bearish for this pair. So that's why I capitalize on it, and I'm just holding this trade because the seasonality tendency likely ends 23rd March. So over the weekend there were a lot of drama with US and Iran, and I don't know how it's going to make the market open tonight, because the market opens tonight. I don't know how it's going to open the market tonight with the recent bombing of oil facilities by US and the rest over the weekend. So same thing here, it was from a supply level on S&P 500. Before I took this trade, I was talking about how I missed out the entry from here. You should have given me a 1 to 4, but I was waiting for a more decent structure compared to what I saw the last time. And you see, just having working with structure basically helps a lot, helps you refine a lot of things. And basically, that is actually what it is for the S&P 500. For the Russell, I didn't take a trade at all on the Russell because I preferred what I was looking like on the S&P 500 and on the Nasdaq, not the Nasdaq, on the Dow Jones. On Nasdaq also, I didn't take any trade. Crude oil, on the other hand, I'm staying away from it. When two people are fighting, just stay away. So I'm staying away from crude oil because I don't want to deal with that volatility. Some people are crazy surfers that they actually know they can ride that whole wave. I'm not the one to ride that wave. It's exhausting. So that's it. Gold. Last week before I took my US 30 trade and AUD USDT trade, I was saying and lamenting how I feel dumb for for not holding my gold trade. Now I'm feeling so smart that I closed the trade. You see how this dynamics can shift in the market. But then gold, I'm staying completely away from gold because if you watch Tradanic, you know fundamentals are not looking good. Even from last year when Brent made a video, and Brent is very, very predictive, highlighting how this year might not be so beautiful for gold in terms of bullishness. So I'm just staying away from gold. Now to observe the seasonality of all these other pairs, because remember we observed COT report, but we've not observed seasonality. Gold, I say gold, euro, where I didn't take this trade when this thing presented itself is just crazy to me. Like the fact that I didn't take this trade from here, but it was a drop-based drop. I didn't want to take it. I was waiting for a deeper retracement because I was fearing this zone here, thinking it would be a supply zone that held. But you see how the market melted through it. So just goes to show that I'm still not perfect. I'm still trying to learn this market, and I still make a lot of mistakes, technical mistakes, but then fundamental analysis that has been spot on. All my fundamental analysis, if you notice, they are usually spot on, and that is thanks to what I learned from Online Trading Campus, which if you want to be a member of, you can send me a DM and I'll be dropping the link for you to get started with Online Trading Campus. So euro technical analysis, drop based drop was a solid level, but I ignored it and the market melted down. Crazy meltdown. That's by the way. But now let's look at the seasonality of this, because we'll also look at valuation because it's also very necessary. But I know for valuation, everything would definitely be looking extended. This is the 5-year average of seasonality, and it still suggests move to the downside until 24th of March. I don't likely see a move up. If I check the 15-year average, 15-year average is actually seeing a different thing, like suggesting a move to the upside for the euro, but I'm not a fan of that yet, especially with this whole thing happening with US. 10-year average suggesting a move to the upside that comes to an end 27th March. That's for euro. Now let's check 10-year average for British pound, suggesting a bottom in 19th. But checking the 15-year before I check the 5-year. So 15-year average of seasonality suggesting a move to the upside, still from a similar time of 19th of this month. Now to eventually check the 5-year average. Again, bottom coming in 19th of March. That's not bad for the British pound. Doesn't mean I'll be rushing into it. I would want to see technical confirmation on this because I'm basically catching a falling knife. Then for the Australian dollar, the move to the downside still extends till 19th March, which is this week. Then we see a move to the upside on the 5-year average. If you check the 10-year average, similar case of bottom coming in 19th of March. 15-year average still suggesting a bottom 19th of March, and I was thinking it would be from this level, but I'll just ignore for now. It might be from a different level below, but we'll just wait to see. But this is just crazy. It's just crazy. Technical analysis is just hard. Ain't nobody want you. Then for the Canadian dollar, still 19th of March for most of these things. 19, 20, 20. Like it's around that same range. That is the 15-year average of seasonality. Checking the 10-year average, still suggesting a move to the upside. Then if you can glimpse at the valuation, which is this one up, you will notice that all the pairs are actually undervalued, which is valid because everything has been melting down for a long time. So it makes sense that everything right now is undervalued. New Zealand dollar, I'm not paying attention to it. Swiss franc still has most of the downside until 20th of March. That's on the 5-year average, 10-year average of seasonality. What are we saying? 10-year average is suggesting a move to the upside. Not yet a fan of that. Then 15-year average is still suggesting a move to the upside. So that's quite confusing. So I'm just anything that's confusing, I stay away from it for now. But the clearest thing for me has just been this US 30 trade that I'll be holding on to. So that is Swiss franc. Everything is looking undervalued right now. If I should just glance through everything, you see every single asset against the US dollar, every single currency asset against the US dollar is looking extremely undervalued right now. So I'll just wait to see what this new week actually brings. I'll wait for technical confirmations to be sure, but then all these type of zones here likely going to be melted through. Well, just to reflect on the mistake I made from this previous cycle here, because remember I was calling bearishness on euro and bearishness on British pound from here. I just didn't time it well. So observing this was a supply level I ignored here. So just teaching you so that you don't make the same mistake I make. So this was the first supply level I ignored here. This was another supply level I was waiting for proper refinement, but then didn't even get it at all. But that's it basically. So for now, what am I going to do for these trades that I have on US 30 and the trade I have on US 500? And I'll be showing you what my plan is on this particular asset. So this is the account right now, and this is what the trade is looking like. Let me pull that up. So US 30, I've trailed my stop to this 4-hour level. If I should go to the daily time frame, you see it's below this week here. So I've trailed my stop on US 30 because I wouldn't want to be giving back all these profits just in case, because I don't know for sure what the market is about to do, but just in case the market wants to reverse, I would want to know that I secured some profits on this trade and it didn't just reverse completely like it did when I had the trade on the Canadian dollar that reversed completely. I didn't make shishi from that trade, even though I was up 1-2 risks to reward, which is crazy. And now the market is moving back to that same direction, which is more painful. Then S&P 500, when the market opens, I'll be trailing my stop to above this week. So that's not any significant distance, but I'm just trailing my stop slowly to see how far before we get to our target, which is way below 6457. So that's 6,457 for the S&P. That's my target. But if this trade goes well, then by next week this account should be passed. But then that's it. It's not about how much effort I put, it's just how it goes. Then for the instant funding account, I thought I was 1k away from getting a payout, but it turns out I'm about 4k away because my best day, which came in last week, was $600. So it has increased the consistency rule. So I would be trading that account for longer. I thought they were measuring consistency by your best trade, not by your best trading day. So I had a lot of take profits on the account, but it was not to my favor. So I'm just going to be here longer for that instant funding. But I'll see how it goes. So far it's been well. So far 1-to-1 risk reward has surprised me with its results. So it's crazy. 1-to-1 risk reward might be up to something, but I'll keep trading the account and I'll keep updating you on the account. And that's all for now. Don't forget to subscribe, don't forget to like, Don't forget to message me on Instagram if you have more questions. But that's it for this weekly outlook. Not a lot. We are in management phase. This is just mostly managing of the trade, not doing a lot. So glad you could stop by. And if this is your first time, please subscribe. I'll be seeing you on the next one.